What's happening, traders, and welcome back to Shift Trading. What we're going to break down for you today is a great example of a trade executed on Euro Japanese yen, giving you the foundation here on the right to take this material and create your own trading plan or guideline going into 2025. This is what I've found over years of trading, currently 6 years in the industry, as my highest probability A+ OTE setups. Now, this is unique to me. You can take this information and develop it as you feel free. Just understand this is solely what I require to see in the market and giving a good indication that I'm on the right side of the market. Okay. Now, first thing we want to identify is a solid swing high. This is a bearish example. We want to find a swing high that is cemented in the market. Now, what is priority number one? We need to see that swing high have swept liquidity. Okay. In this instance, you can see that is a high because we have two lower highs on either side. Market has swept that and displaced down, making that a valid swing high according to my rules. We then see market creating lows, swing low, continuing, until eventually we get a swing low and giving a good indication with this change in the state of delivery that market is due an exhaustion. Okay. Once we've identified that, we can then go ahead and place our Fibonacci on. Okay, good. Now, this is our golden zone. All right. A couple of other requirements that we want to see within this ratio, giving us high probabilities, is a clear breaker structure. What we get here is a clean breaker structure to the downside. We also want to see a creation of fair value gaps. Now you can see market is creating fair value gaps to the downside, giving us a good indication that momentum has stepped into the market. That bearish order flow is being respected. Okay, so we have an H1 fair value gap right in the middle of our golden zone, just over here. What else do we see? We have a supply zone or order block. Within that ratio as well. My personal preference is I'm taking the first fair value gap or overlapping order block within that closest to the 62 ratio. Okay. Lastly, what we want to see in the market is buy side liquidity being engineered, that inducement prior to your level being tapped. It's very rare to see market just impulse pullback continue down. It does happen. I'm not saying that it doesn't, but the likeliness of that level being run eventually is pretty high, being used as the fuel to continue with the downwards movement. So for me, as a personal preference, I want to see that inducement, giving that added confluence to show that the market is wanting to sweep and continue down. All right. Now we wait for market. You can see here, whether you want to get on 62, it's your prerogative. This isn't within my trading hours. So the next day, woken up, market has swept above, sweeping all of that inducement there and moving to the downside. Stops are placed above the swing high. You can place them wherever you want, your preference. If you want to look for lower time frame confirmation entries in there, you are more than welcome. For me, I'm taking this trade, swing above, stop loss above the swing high, lowest hanging fruit being the swing low, and closing off majority of my trade, probably 80% in and around this area, with a little bit of a floater still running. Okay. Now again, guys, these are the priorities that I use. You can develop this plan. Priority number one for me, sweeper liquidity. Number two, we're waiting for a market structure shift or a break of structure, creation of a fair value gap or inducement. Okay. You can put this all together, create a checklist at the top right-hand side of your PC and tick it off as you are going through the motions, what you are looking for each and every single day. Now, an added bonus is, again, market won't always sweep. This will come with time as you gain experience in the market, you want to see market either sweep liquidity or mitigate a previous level. This just so happens to be that market has done both, okay? But not all the time is market going to present a swing high inducement before this level. You'll maybe see market pull up, push down, mitigate a level, and continue to the downside, where we eliminate this, okay? But again, what it's giving you is a good indication that bearish PD arrays are being respected. Order flow is to the downside, and those PD arrays are being respected in a continuation fashion. All right, guys, I hope this helped you out. It's just a short, quick, to the point video. If you guys want this in a PDF, just drop me a message. I can do it for you. I'll be bringing out a bit more content along the lines of how I see the markets and how I want to essentially get in and what my playbook looks like. All right, traders, have a good one, and we'll catch you soon. Cheers.